got some bad news, guys. I got some bad news. I'm entering myself into day trading rehab. Now, first off, before everybody freaks out, I know that I'm not the first person to coin the phrase day trading rehab, but my rules might be different than the other person on YouTube who's also been inside of DayTrader rehab before. So I'm going to break down the 5 rules that are going to be enforced while inside day trading rehab. So make sure you guys stay tuned to find out what I'm going to be doing to change, to get over some hurdles, to create consistency and focus on what really is important when it comes down to day trading. So I'm going to break it down here in this video. Make sure you guys stay tuned and check it out. Let's go. All right, so there's 5 rules that are implemented in DayTrader Rehab by the rehab facility. The 5 rules are very simple, but they're the 5 rules that I have to follow while inside of DayTrader Rehab. And you might ask yourself, well, how long are you going to be inside of DayTrader Rehab? Well, no one really ever knows how long they're going to check in and when they're going to check out. It's just an overall exploratory process. We've addressed that we have an issue, and that's the first step. So the first rule of DayTrader Rehab is very simple. 2 trades per ticker. Why am I doing that? Why is that a rule? That rule, first off, is it's going to make me more focused on the setup, knowing that I can only trade a ticker 2 times. Looking back at some of my biggest losses, looking at some of my red days, looking back at my trading, history, most of the time when I do end up losing money, it's because I end up chasing a stock, I end up over trading a stock, I end up getting FOMO, and all of these things happen. And that's why I believe if I limit myself to the amount of trades that I can take on a stock, this for now, just while in rehab, it's going to force me to be more patient and to wait for the setup and be patient, less emotional, less FOMO, all right? This is what we're creating these rules to avoid issues that we've had in the past and to work on problems. We're here to become better day traders, right? Now, another reason that I like this rule of only having 2 trades per ticker is I've talked about this in the past as well. Most of the time with stocks, when we're trading these stocks, there's normally maybe 1 or 2, maybe 3, maybe 1 or 2 good setup entries and exits and overall trades on a move before the stock gets to a point that it's overextended and it becomes too risky to trade. So that's a really good reason as well to limit myself here, because I know by looking in the past that some of my biggest losses came from the 3rd or the 4th or the 5th trade on a stock. So we're going to cut that out real quick, and we're going to do it here in rehab. Here's a perfect example with MTP really having a beautiful move right out of the gate. So we'll call this like the first move of the day, which was good. Awesome little breakout here. It rallied up above the VWAP, and you can see kind of chopped. It had a little pullback here and then rallied one more time. We had another consolidation area before getting that squeeze up there to $4. So we had the first move basically from 260 up to the 348 area and then consolidated at that point. And then that another breakout ended up coming. Another breakout there. Bam. Up there to $4.30. So that was really just like 2 solid trades. Now, there was obviously little breakouts along the way and little pops and drops, but in general, really these were the 2 solid moves. The 2 really good overall moves of the day was this right out of the bell breakout and then this second kind of bull flag and the breakout to the upside. And as you can see here, setting up for the 3rd move over $4, it got crushed and pulled back. And that's another reason that FOMO can really be a pain in the butt. So, all right, so the second rule, and this is actually perfect because I've already drawn it on the chart. We're looking for actual patterns like bull flags. We're going to be focused primarily on trading bull flags for the next couple months. And you might laugh and say, well, there's a lot of other setups, there's other things to do. But one thing that I've learned over the years trading is that the bull flag is probably one of the most consistent, strongest overall setups and breakouts and kind of a universal setup, because a lot of people are looking for bull flags, and there's a reason that these setups work because a lot of people are looking for them. And now you might ask yourself, well, how do you know if it's a bull flag or when is it a bull flag and what's a bull flag? Now, the biggest thing to focus on here really is consolidation after making a leg higher, right? So like this move here over 340, it pops up here to the $4 area, it pulls back, and you can see it consolidates for what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes, 20 minutes, 12 minutes, 15 minutes. It consolidates there at the 345 area before making that break higher. The biggest thing, the best thing about trading these bull flags is, first off, when you do get that confirmation of the breakout to the upside, when you get that confirmation, you know that there's support, right? There's support down here in the 350, 345 area. So if I'm buying here at the 360s, I know there's some support here in the 350 area. I know that people have been buying. I can see that they've been buying there, right? They've been buying in that support area. So I know that if I buy there, I'm not going to get dumped on for $1. Now, obviously, there's always a chance that could happen. That's trading. But the chance of this going from 360 for my entry down here to $3 like that is going to be much slimmer than this move here where it rallies to 4. So let's say I was chasing it and I bought here at the $4 area. You can see it drop from $4 back down there to 340, 350 area, and bounced off of that support. So consolidation, Patrick, consolidation is very important and this is very important. That's what we're going to be looking for. That's the number 2 rule. Consolidation, bull flags, really looking for that area to buy and to minimize our risk. Third rule, and probably the most important rule of DayTrader Trading Rehab here, a maximum of $50 loss. Now, that sounds hard, actually. That does sound pretty hard to trade and make money and only have a maximum of $50. But what that's going to allow me to do is really only look for the best setups, the overall best setups, knowing that if I hit $50 in losses, I've got to walk away, right? So if I can't hit my target and I hit $50 in losses, I'm done for the day. So that's like a realization of being like, hey, don't do anything stupid, Patrick. Don't go chasing that stock. Don't you do it. Don't you go chase it. Because you know if you hit your loss for the day, that $50 loss, that maximum loss for the day, you're going to be done. And it's over. So don't do it. Another thing it's going to allow me to do is to make sure that I'm really cutting off my losers quick. I'm not going to be holding any losers. I can't afford to hold losers, right? I can't afford to hope and pray. So $50, that's the maximum loss to start here in the rehab. We're looking to make $100 a day. Now, the thing here is that I know that it's easy to make $100 in one trade. I know that I can buy 5,000 shares of a stock, look for a breakout, and sell for a massive profit. I know I can do that, right? That's easy. That's easy. But can I do that consistently? Can I buy 5,000 shares of a stock, consistently trade it, and cut off my losers? No, because we've learned in the past that I can't do that. So what I need to do is I need to scale back. I need to manage my trades better. I need to manage my size better because I have to, again, stop myself from losing more than $50 a day, because if I hit that $50 target or I hit that $50 maximum loss, I'm done for the day. So I know, first off, that I have to be able to size into the trade. So if I'm sizing here and I want to buy this breakout over 360, and I know that the 350 area is my support, I'm looking for a breakout, the maximum amount of shares that I can really buy for this setup here is around 500 shares. Because if I'm going to risk off the 550 area, we'll say like 555, 550 area, I need to be able to get in here at the 360s. And I really, I need to be careful here. Obviously, I need to be careful because if this thing pulls back and I get out for more than a $50 loss, then I will be done. So maybe only buying 325 shares, maybe only buying 250 shares. It's really going to come down to how the stock is moving in the overall price action. So I've really got to focus on my overall sizing. I can't be buying 5,000 shares of every single stock that moves. So sizing is going to be very important here. So the fourth rule here as well is no more chasing. Like I said, we're looking for consolidation areas only. When a stock gets this far from the VWAP, I don't care what it's doing. I don't care if it's going from $1 to $1 million. When it's this far from the VWAP, like this right here, when it's this far from the VWAP, people, I'm not buying it. I'm waiting for that pullback, that consolidation area. No more chasing. No more trying to Bang, 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 trying to chase. Look at this here. One thing we can see as well. We get the breakout, this little 1 minute candle. We get that breakout. Next 1, 2. You get in most moves, you're getting I don't want to say maximum, but you're usually getting what? 1 to 2, maybe 3 green bars before a slight pullback or a pullback at that point. So no more chasing, being consistent in that idea of looking for those pullbacks and really kind of looking to capitalize. So we really want to see that pullback in general before buying. That's what we're looking for. We're looking for that pullback in general to either a previous support or resistance here. You can see here, had a little trouble there at the 320s. Guess what? It got topped out. It broke through that 320 area, but look what it did. It ended up pulling back to that previous resistance, now turning that into support. And that's like, wow, that's a great trade, right? That's basically proving that this thing has momentum to break through that resistance. It pulls back, and then proving that the buyers are willing to buy there at that previous resistance, turning that into support, and then getting a move higher. So those are things I'm looking for. I'm looking for pullbacks, and I'm looking for just the overall where that VWAP is. If a stock is so far from the VWAP, I'm just staying away from it. I'm looking for quality setups in general. So no more chasing, no more FOMO. Nope, we ain't doing it. Fifth rule of the day. The fifth rule of the day here is going to be very, very, very simple and very textbook. 11 a.m. I'm done. I am done trading by 11 a.m. and I'll show you kind of why. What happens is a lot of people end up trading pre-market, or they trade right at the bell. They trade that first 30 minutes, maybe the hour of the day. If they don't make money in that first hour of the day, there's probably a good chance they lost money. So the best traders are going to make that money in that first hour. They're going to crush whatever setups there are, or they're not going to trade at all if there are no setups. But the best traders really are going to hammer that first hour and a half. And then after that, like I said, most traders have a target, or they have an overall just kind of process. Once we get past that 11 o'clock area, a lot of people are going to be done for the day. So there are going to be less people buying, less people looking for those momentum breakouts. Remember, we're trading patterns because we're looking for other people who are also looking to trade those same exact patterns, and that's why those patterns work. Those bull flags, the reason those bull flags work is because there's thousands of other people trading those same exact setups. So after 11 o'clock, when less people are trading, those setups have less follow through. You can see here, USEG went from $6 up there to $7.60. It's got a really low float as well, but it just didn't go anywhere after that because there was just no volume on it, and it looked like really just no one was trading it. But if this would have made a move like this, if USEG would have made a move, a little bit pre-market and then right at the bell and really been on everyone's scanners and everyone was trading it at the bell, this thing had potential to go like to $30 because of how small the float is. So I think the big reason that this didn't make a move is because there was a lot of other stocks that were already kind of made the moves for the day. And then later on in the day, you just don't get that same follow through. Obviously, at the end of the day, you will get those end of day squeezes if something is really heavily shorted. People are trying to get covered before the end of the day. But in general, I believe that really that first hour to 2 hours is the hot time to look for those setups and look for those follow through. Again, normally, like I said, there's 1 or 2 good moves in a stock that are solid, good setups. There's 2 or maybe 3. Maybe there's 2 or 3 really good setups in those stocks, and those normally happen in the morning. If it doesn't happen, if we don't get those breakouts, then normally that stock is done. So that's what we're focused on. The 5 rules. The 5 rules of day trading rehab. 2 trades per stock. Consolidation area bull flags. That's the only thing we're looking for to trade. We're also limiting our loss, our maximum loss per day to $50 per day with a target of making $100 per day, or a little bit more. I'll take a little bit more than that, but no revenge trading, no FOMO. We're done at 11 a.m. And I think this is going to be a really good just overall journey for me. Like I said, I know I've been doing this a while, and I keep making stupid mistakes. I keep doing stupid things, emotional things for reasons that, whatever. I don't know why exactly I do those reasons, but that's a deeper and a darker video to go into than to sit here and try to figure out why I do what I do. But with these rules now, I'm going to have to follow the rules. You guys are going to keep me in line here, and that's why we're going into DayTrader Rehab. If you guys haven't already, do me one big favor, hit that like button, subscribe button, leave a comment down below. What do you guys think about the rules? Should I change these rules? I'm interested to find out what you guys think down below.